think everybody's on mute. Thank you. I see, let me look here, 22 people. In fact, hold on a minute. That's 22 great people live. So it's good to have you here. And what we're going to do is, if you have a question or comment, after about 10, 15 minutes or so, just start chatting and ask questions. And at the end, I can do a Q&A. So this is just a real quick primer. It's designed for realtors, financial planners, homeowners, consumers, anybody who wants to know a little bit about reverse mortgages without an entire 5-hour seminar. It's the 5 key things you need to know about reverse mortgages. So I'm going to see if my video is on. I think it is. By golly, there I am. Good to be here. And Sarah Shepper is my daughter. She's a winner. She does all the hard work, by the way. Sarah does all the processing and a lot of the marketing and promotional items for me, but the paperwork is her strength. She's amazing, and it's really good that she is, always helping me each and every day. The definition of a reverse mortgage, here it is out of a textbook. The boring definition, but we got to give it to you because I have a better definition on the next slide. Paul Shepper definition in 5 words. But let's look at the long version. A reverse mortgage, it's a loan that enables older Americans age 55 plus to convert. All they're doing is converting a portion of their home equity into spendable tax-free cash without giving up ownership and without being required to make a monthly payment out of the checking account. Now that is I still say it's a good definition, but I'll tell you a better one. A better one is, and here are the 5 words. If anyone on the chat box pops it in, you get a high five and a lot of respect from Paul Shepper. Here it is, because no one usually gets this. The short definition of a reverse mortgage, it is just it's just a loan. That's it. It's a loan like any other mortgage. There's a traditional mortgage and a reverse mortgage. If you take the word reverse off reverse mortgage, a mortgage is a mortgage is a mortgage. It's just a loan. There's an interest rate, an amount that you borrow, an amount you're going to have to repay, just like every single loan in America. So it's nothing fancy. One of my favorite movies was The Right Stuff. It was on the astronauts, Apollo, I think 13. And it reminds me about a reverse mortgage because the reverse mortgage might be the right stuff, but we don't know, because what is more important is a reverse mortgage has to be the right loan for the right person at the right time for the right reason on the right property for the right family. It has to be all aligned. Using the solar system analogy, once again, the universe has to be aligned, kind of like the right stuff, right? So it's got to be the right loan for the right person at the right time. That's what has to happen on a reverse mortgage. Here are the 5 things we're going to go over. The myths, the misconceptions is the first one. The second would be comparing it with a regular loan. The third is, why in the heck are people getting a reverse mortgage? And of course, number 4, I think ties into number 3. It's what are the alternatives? Because in life, you got to look at the alternatives of anything before you get a certain item. And then number 5 is just kind of the who, when, where, and how of reverse mortgages, about, how do you take the money? How does it work? What happens each month on a monthly statement, etc. So let's get to the first of 5. The myths and misconceptions are this, and there are 3 or 4 of you I could see that are just homeowners looking, consumers looking, and the biggest, fattest, biggest mistake, lie in the world is, oh, the bank is gonna hold the title to your home and the bank takes your equity. There's the buzzer. The buzzer means wrong, wrong, wrong. This is just a loan. Like I said, the 5 words, it is just a loan. It's a loan. So the home, just like a traditional loan, is used as collateral. That's all. It's just a loan. You got to pay it back because, as Harry Truman once said, there is no free lunch in this world, right? There's interest, there's fees. You got to pay the loan back. You're just borrowing money. That's all a reverse mortgage is. The title, the deed, the ownership, everything remains in the name of the owner. If you're married, it stays in the name of the surviving spouse if one of you graduates to heaven first, right? When both people on title, let's just say husband and wife, are both no longer here, they're deceased, they leave this earth, well, then all of the remaining equity goes to the kids, to the heirs. In some case, I had 2 last week. It's going to a charity. It's their money, not the bank's. The bank does not own the home or the title to the property. They're just a lender using the property as collateral. That's it. Pretty simple. Here's what has changed recently in this world and with reverse mortgages is that the homeowner insurance costs have gone way, way up. That's why we're getting a little bit more calls now, because a lot of seniors are on I call it flat, fixed, steady Eddie income. It doesn't go up too much except for the cost of living index, COLA we call it. Inflation's high, gas is high, groceries are high, everyday living expenses are high. So what has changed is reverse mortgages are getting very popular once again because people aren't going to borrow a normal loan, a regular loan, a traditional loan. Here's why: because the rates are close to 8%. So with inflation going up, gas, groceries, and all that, that has changed. The other thing is this, and this is really what I've noticed. A lot of millionaires are getting reverse mortgages now. It's not just for those who are out of money and out of hope and out of gas, so to speak. See, a reverse mortgage is now part of a comprehensive retirement plan, a holistic approach where people are taking and incorporating some of the housing wealth into spendable cash, tax-free. There's savings, there's checking, there's IRAs, there's stocks, bonds, money market. In the old days, people would deplete every single penny and then call me and say, hey, it's time for a reverse mortgage because I ain't got no more money. So what's happening now is people are spreading it out, kind of like a gardener does with fertilizer. You use a little bit of housing equity, a little bit of cash, savings, checking, and incorporate it into an overall long-term, comprehensive, and very systematic, strategic retirement plan. That's kind of the new trend that I'm seeing. The other one is counseling does a suitability test, which is really kind of cool now. They make sure that it's sensible, appropriate, and sensible and sustainable. The fees are capped, which is nice, and the loan proceeds at closing are limited. They don't allow seniors many times to take the entire enchilada of money. What they do is they'll limit it to 60% maybe the first year, and then after about a year, you can take the rest of the money later, because I guess they'd rather give 2 enchiladas than one big, fat taco, so to speak, right? So the living trust review is really a nice change because the vesting stays in the living trust. If you're in a living trust now, it stays in the living trust. You don't take it out and put it right back in like a lot of traditional loans, because here's what happens: 1 out of 100 people forget to put it back in the living trust. So with a reverse mortgage, we keep it safe, sound, and secure in the living trust, but we review the living trust just to make sure it's beautiful and everything's in order. The other one is buying a home with a reverse mortgage. Before, you used to only have to refinance, and now buying a home is really popular, especially with the real estate agents I'm dealing with. Is now you can literally use a reverse mortgage like any other FHA loan, and you can get a loan to buy the home. There's a down payment requirement plus the loan, just like any other loan. So those are really popular, and they're pretty much the same as a refinance. A reverse mortgage purchase and a reverse mortgage refinance are pretty much apple and apple the same. The difference is on a purchase, there's a little bit more moving parts. You've got a listing agent, the buying agent, the transaction coordinators on each side, escrow, title, termite, you've got appraisals. Everything has to line up, but bring it on. Reverse mortgages for purchases are wonderful. The only bad news, and I'm going to say it's not horrible news, but it's bad news, is the down payment on a reverse mortgage purchase is bigger than you think. It's not like it used to be, about 50% down payment. It's more like 55% down now, because the higher the rate goes, the lower the amount of money you can qualify for. So a lot of people are buying the home cash and then refinancing later, but you can easily treat a reverse mortgage purchase like any other purchase and buy a home with a reverse mortgage. It's just a loan, those 5 words. It's just a loan like any other loan. Comparing it with a regular loan, apple to apple. Here is the comparison with a traditional loan.